Okay, here's a super duper condensed version of that opening video. We basically went short because we had a squeeze present on the 5, the 15, and the 30. Sorry, the 1 hour. And the daily is an inside candle. So I had no bias before the open. But as soon as the thing opened, I had a short bias. But I was looking for a short entry. So what we did is we waited for the squeeze to fire 2 periods in on the 5 minute. And then we decided that on this candle, if it broke the low of this candle, which was an inside candle at the time, right? You got a big red candle, then an inside candle, then it made another lower big red inside candle, then it made another inside candle. So big red drop, inside candle, another red drop, another inside candle. So we decided to go short at the bottom of this candle, and that entry stuck. And then as it bounced around, I suggested that based on this histogram, I would not be surprised to see the 5 minute come back up. So I suggested taking gains on half down in this area. So now you're riding the other half with a break-even stop. But I've since even moved that stop down to the top of these candles. So your stop is, at least your stop is covering commissions on that second half. So you've already made gains on the first half, over 60 cents per contract. And now you're riding the second half of your position with a stop that you'd be about 7 cents in the money. So it pays for commissions. So depending on what your commissions are, because I've negotiated to make my commissions a lot lower than they were when I first started. Always recommend calling your broker, make them lower your commissions. So now what I would be doing is I'm just watching the range. But here's the thing. The 15-minute squeeze is clearly fired to the downside. Price is following that. So, but you're in enough periods of downside action that even the 15-minute could now bounce if it wants and consolidate. So the next major clue, like the easy part of this trade is over. Like if you wanted to, you could just cover the shorts right now and be done for the day. You made, on this trade, you would have made $1, over $1. So, depending on what your definition of risk and reward is, this is already a great day. You could just stop right now. You're done, depending on how many contracts you're trading. It's a game over. You win. Go play with your kids the rest of the night. That's what I'm going to do as soon as I finish this video. So, but anyway, I just wanted to make this for a review, a quick review. So that was the setup. That's the reason we looked short. That's the reason we took the short trade. The reason I would keep the stop at break even. See, Strat would have you lower your stop per the 5 minute. I wouldn't do that because I think there's a chance that this could keep going because of this setup I see on the squeeze. So it doesn't mean that it will. It's just a slight edge because the 5 minute fired lower, the 15 fired lower. So why wouldn't the 1 hour fire lower? Well, I can tell you why the 1 hour might not fire lower, because we're just chopping in this range. There's no trend. Look at this range. Since Friday, we're chopping in the range. And all I did was catch a short from the top part of the range down to, say, the bottom third of the range. So that's nothing exciting. You know what would get me excited? If you stayed short with a break-even stop, you break this range. That would be the first thing that would make me go, ooh. But then if it can really break the entire range of Friday's low and have this 1 hour squeeze fire to the short, meaning there's no more red dots and now you've got the histogram coming down, that's the kind of setup that can lead you to hitting these targets over here, which Yahtzee would be you're coming down through all, at least touching even the fourth target, which is $90.06. Not saying that would happen, but the setup is there. And you've got another inside, and you know how things are fractal? I'm sorry, this video is too long already. But you see how this outside candle, inside candle, look, outside candle with a bearish price action, right? But it's an outside candle followed by an inside candle, followed by another bearish candle, followed by another inside candle. Well, if you look at the daily, you got a big bearish, you got an inside candle, then you got a big bearish candle, followed by another inside candle, followed by a bearish candle, meaning it made a new low without making a new high, followed by another inside candle. It's fractal. So just as I showed you, now I know it might sound like I'm crazy. I'm just telling you, fractals appear in different methods, not just Elliott wave. And even with the Strat method, you can see fractals sometimes. I'm just pointing it out that this is a little reminiscent of the daily. And this is coming down. I'm not saying that it's coming, the whole thing is coming down. I'm just saying it's another clue. Okay, so that's the deal. Good luck.